than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the...
Hey guys and girls, welcome to this week's episode of the No BS with Birchy podcast. I'm your host, Nathan Birch, and this is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. And that it is. We are living in a world which is very different than what we've lived in beforehand. A lot of people are being left behind. A lot of people are, realizing that the veil that they've been lifted from their eyes. The world isn't getting into any worse of a place than it ever was beforehand. It is just that your consciousness level is rising to that point where you're seeing that there's a lot of crap out there that's, not as questionable, let's call it, as questionable. But as always, I'm not your financial advisor. None of this is financial advice. I've never really been into trouble for doing that, but I'd just like to give a disclaimer on it because, ultimately, I just want you to understand that. And, for all the people, the Agent Smiths in the Matrix that like to, ever want to question us, they can go away as well. But today I'm going to be talking about a follow-up topic from our last week's episode, which is real estate investing is a get-rich slow game part 2. Talked a lot about it last week, more things to talk about this week, and lots of questions to answer from you guys in the community. But I guess, looking at property, I talk about property a lot because property is my favorite go-to to invest in. You've got, I talked last week about selling your time, selling the hours in your day, you're stuck and all that sort of stuff. But, you've got other options, right? One is sell your time, make some money. People just never pass that. That's your first level, right? If you can pass that level, you can take that money you earn and then go and buy assets that are going to recreate more cash flow, which is great. Then you can create other sort of assets, whether it be businesses, side hustles, other financial sort of things that you can be doing to be able to scale your time, scale your position. Because, I don't think that when we were born, I don't know exactly, who put us here. I can't answer why, you can go to all your scriptures about that. But from my perspective, looking at why we're here, how we're here, and all that sort of stuff, I don't think that we were born in order to be trapped to a desk, 40 hours a week, and to be getting by. I think that's it's a great system, right, for those that created it. It's not a great system for all those that are inside it. So you want to create your own system that you can be on top of and, build yourself, intergenerational wealth. It's going to, out-succeed yourself and your children, your grandchildren, and be able to build something you can keep building on. I guess looking at the last, 36 years of my life, half of that I've been investing in the property. I've been building something which seems like for a lifetime, but I've only built something. I'm the first generation of this, right? What about the next generation? What about the generation after? What are you building? Is it for you? Is it for your kids? Is it for your grandkids? People say, nah, my kids, they can go sort their own life out or whatever. But ultimately, why are you having kids for if you're just going to be like, oh, they can sort their own life out, right? Don't you want to build something that's bigger than you? And I guess that's a system, right? When these guys that created the world that we have as a system that we live in today, and the infrastructure, the contract, the matrix, that we're trying to escape from, we're trying to wake up from this. We're like, fuck, I'm in someone else's system. You want to create your own system for your own personal liberties, your own freedoms, that you can, do what you want, when you want, how you want. And, I think that's what I look at it as. It is a slow game. But, over the last 18 years of my life, I'm still only 36 years old. Most people are, really starting their careers now and going to be stuck for the next 30 years of their life doing all the things that they don't want to do. But I'm at a position where I've got the assets where, imagine what it's going to be like another 30 years. I cannot even believe where I'll be in that period of time because I'm so young still to be able to do stuff. Even though I feel really old half the time, I still know that I'm young and I still know that there's so many greater days ahead. So, looking at your portfolio, I guess there's two parts to it. What are you doing for your future days? You could be at 50 and going, well, I'm about to retire, or I'm trying to retire, or I'm trying to get ahead. We could all probably live to 80 years old as long as we keep a fit, healthy, active lifestyle, treat ourselves well. Eating healthy food comes from having money because it's expensive to eat healthy, and keeping a healthy lifestyle and having options and freedom and choices all come at a cost of financial money. So if you can build up that base, it's going to support that. You're going to be able to live to 100. to 80, 90. I don't see billionaires, dying at 40 and 50 from all these illnesses. Like they've got, positions in life where they can have better health and better things that could be doing and all that sort of stuff. So looking at that long game, where are you on your journey? Are you halfway in? Are you a quarter way in? How soon do you want to get out? How soon do you want to be able to, spend that time with the kids, travel around the world, save koalas in the back of the outback? Whatever that is, that's your journey, that's your story, that's what you're achieving. But, what steps have you taken? Are you still at level zero where you're, working in a job? Could you build a secondary income? I think 2020 was the biggest year of awakenment for people to go, and people have forgotten about it already, right? I find it so amusing because I remember lots of shit, and people can't remember what their life was 2 years beforehand. They can't remember what it was 4 years beforehand. They can't remember 10 years ago. They just remember it was a figure and a time in space that happened of where they were. But, people can't remember back to 2020 when all this stuff went on. 2020 was probably the biggest awakenment for people. And this is what I've realized for people coming to us is that, like, shit, my job is not really great. I've given it 10 years, I've given it 15 years, I've given it 20 years, I've given it 30, 40 years into my job, and I just lost it like that. They've forced me to abuse my body in a way that I don't want to. They've forced me to do this, and, they're stuck. They can't do anything else. So, if that's you, if that's what you're thinking, it's like, well, you've got choices, right? You could either just go back at the Matrix and take the blue pill and, just be in the Matrix in La La Land and make yourself happy. Or you can be like, no, actually, this isn't how my fucking story goes. What am I going to do about it? And then plan for that. And it might not be, it doesn't happen. Like, there was never a day for Birchy where confetti fell out of the sky and it was like, oh, wow, Birchy's so rich. He's got all these options. He's got a Ferrari at his front driveway or anything like that. It was just a gradual progression where I'm like, shit, I've got more options. I've got more freedoms. I've got more choices. I don't have to do this. I don't have to bow down. I don't have to do that. And it was via the actions and the habits and the things that I did in order to get to that position. My favorite go-to is property, right? That's what I talk about. You can leverage it. You can get a loan on it. That's what I mean by leveraging it. You can add value to it by doing renovations or whatever you want to do. You can see the capital appreciation go up with the asset. If the asset rises and the debt stays the same, well, then you've got debt, which wasn't yours to start off with anyway, that you can pay back, which is trash. If you can pay back that deadbeat money, currency back to the bank, you can then buy an asset, get a loan attached to it, ride the value of the asset up, get that loan when it's worthless, pay it out either via the rental income coming in or pay it out via selling off something. It could be selling off the iPhone and, paying out the debt, because as the debt gets devalued. So you can leverage it. It's great. You've got the cash flow coming through. It's not like people say, should I buy a Bitcoin? Should I buy a bit of gold? Should I buy a bit of silver? Whatever the case may be, buy all of it. It's all great. They're all great things. It's better than, doing nothing with your money. It's better than buying Maccas that you're going to eat and crap out and, it's disappeared. You've got physical bit of gold, a bit of metal or whatever the case may be. The problem with gold, silver, Bitcoin, all those things is they don't actually bring in cash flow. And when they don't bring in cash flow, it's not helping you support your lifestyle. So you need a balance of cash flow, growth, equity, capital. They're all things that are required for you to live by in a good, sustainable life and have lots of options. So for me, my favourite go-to is the property, then potentially businesses. You could have a side hustle. You could buy shit. I said beforehand, when I was a kid, I was at school, I used to get those lighters and sell them to other kids. I used to breed fish in my family aquarium. A lot of people may not know, I used to have a family business. It was an aquarium back in the 1990s and the early 2000s. I know everything about fish and aquariums. There's something new for people. With it, I grew up in a family business. And I used to breed fish as well. And, I'd sell these fish in my family business. I would grow plants. Like, when I say grow plants, it's not like I grew a crop of weed or anything. But I grew, plants for in the fish tanks, and then I'd sell them in the shop and all that sort of stuff. And I guess I had exposure to entrepreneurial at the start. And, I saw, but a lot of people in business sell all their time and they never actually take their money, their active income, because you can have a job, you can have a business, or you can have a business, right? A business by being self-employed, where you're just bought yourself a job, or you can have a business which is leverageable. this is a fun fact, right? This is the funniest thing that had occurred. The other night I hung up on the phone to someone, and I remembered something that had occurred earlier on in the day. I own a Chinese restaurant. Like, I fucking kid you not, right? I own a Chinese restaurant. I didn't even fucking know that I forgot, right? My life is so busy. I've got all these things going on. I've got a Chinese restaurant and I didn't even fucking know about it, right? And it only just clicked back in my head then when I thought about it, right? Am I sitting there flipping over rice and fucking curry prawns and whatever? No, right? No, I don't even know anything about it, right? I inherited it in a business that I bought. There was a Chinese restaurant. I think it brings in maybe $300,000 profit per year. But how many Chinese restaurants do we see where you've got fucking sweat dripping off them? They've been working in there for 40 years and all that sort of stuff. How many of those things do we see? But I've just inherited a Chinese restaurant and it's a part of my business, it's a part of the group of companies, and that is that's not a business that I need to be active in. I'm not going to sit there and serve rolls of, spring rolls and Sangjoy Bao, right? But I've got that business, right? That's a business that I inherited. Could you build those businesses? Could you build assets? Not saying go out and buy a Chinese restaurant, because I don't know how it's going to work. Literally, it's a part of a deal. It's a part of a resort, actually. And yeah, they actually sell. This is like a dark kitchen. They sell out it's a big thing on Menulog or Uber Eats or something. And there's all these staff, it's processed, it's systemized and all that. And, are you if you're getting a business, are you buying yourself a bigger job, or are you buying yourself a business that you can scale? And that's the thing, right? So you've got real estate, which is cool. You've got businesses, side hustles. You've got trading that you could do. You could do flips. When I was younger, I used to, sell whatever I could. I'd buy shit and I'd be like, I could trade it and I could see the opportunity. And, I started off with cigarette lighters and CDs at school and stuff. I actually used to go on to eBay and I'd buy books and audio tapes. There was lots of Tony Robbins stuff back in the day, and I'd buy them on eBay. They're $200. I'd listen to it and then I'd put it back on and I'd sell it off and I'd get my money back. And in some instances, I'd earn more money. So, for you to educate yourself, if you really wanted to, you can, right? And you can make money from that. You can flip things. You can do whatever. For me, I started flipping caravans and cars, and I started flipping houses. And then I realized, why would I ever want to flip a house? I can keep extracting. I've got fucking juice that I can extract out via cash flow. And with that cash flow, I can keep living on that and then be buying more assets that I can extract more cash flow out of. So, think about yourself as, you have a job, cool. Take that job, take your passions that you want to do, create, B.Invested, what I'm doing, the videos, the education. I give so much free education. People say to me, Nathan, you give so much education. Why do you do it? People selling a course. I actually don't care about selling my education. I've got business, I've got paid for service, I've got heaps of stuff that you can pay for me to do business with me from. Most of the things are, results-based business. I don't need to. I'll just share all the education. All the people that sell all those education courses will probably get angry at the shit Birchy puts out there. And, they go, I can't sell my course. You said better information, whatever. But do things that you're passionate about. I know people out there that do video courses, right? So I know someone that has a video course, which they sell. I know someone that has car courses and crypto courses and all these things they're passionate about, and they do very well out of that. They do better than what anyone could in a job. So, working out what is your passion, keep your job, buy some property, build a business. All these things play a role in a successful position. The one thing I love about property is that I never have to go out there and repeat the process. I see so many people that come to me, because probably, I don't know, maybe 1/3 of my investors that I help with building their portfolios are business people, and their businesses, they have to keep performing those tricks day in and day out, right? Yes, you've got a business, you don't have to report to the boss, but the boss is still your kid's mouth. The boss is still, when I say the kid's mouth, feeding the kids, feeding your family, supporting, putting a roof over your head. They're all the things that you're accountable to, just like you would be in a boss, from a boss. Your clients, right? I look at my community. You guys are my boss. You guys level me. You guys keep me accountable, with what I do. So it's important to remember that you do have parameters to work with, but at the same time, you don't want to be just buying yourself a business or getting into a business where you're working all this time and just becoming a slave to yourself and all those things that are around you. You want to be strategic. You want to have scalable things. So if you've got a business, you're really taking that active income that you've got to do tricks for, and then take that active income and buy assets that are going to give you passive income, and that is where the properties come back in. So they're a crucial part. It's not all the end game, but these things get done over years and decades. So it's been nearly 2 decades, right? 2 decades isn't a much time. I was very young when I first started. However, 2 decades is a very long time. So, people want instant gratification. There's a plethora of courses out there where people say, oh, you can do this and this and this. You buy the property, subdivide, do this. And you sit and you go, okay, I've done the course. I've spent all the money on these things. Where's my portfolio? You might have bought a property, you might have sold it, you might have made a few dollars, but you're still not any better. You just made 100 grand, which is only money, which is a belief system, because money has no value unless you believe it does. So that's why I like doing what I do and why I'm very different to other people. So getting on to some of the questions that you guys had, going to answer some more of them. So what would your prerequisite for looking at farm properties? Be mindful when you're buying a farm property, if it's over 25 acres, you would fall into commercial territory. They'll treat you as a farm, and you would need to put down a 40% deposit, and it becomes a commercial loan. So it's commercial by nature. As for farm, depending on what you're farming, if you want fish, you need to have fish ponds. If you need, crops, you need cropping. You need, whatever you need around it. So, like I've been looking at farming. I'm not an expert in agriculture or agribusiness. I actually bought like a massive property going back like a year ago, which was like a massive property. It's a 1,250 acre, it's 5 million square meters of land. And I just realized it went up 5 times in a year, because there's one that's just come up down the road for 5 times more. It's missing some of the scrub, which if I cleared it, it wouldn't have the scrub. And that might add, 1 times the value of what mine would be worth. So, there's things that depends what you're trying to achieve from. If you just want 5 acres, 10 acres, 20 acres, put little animals and all that sort of stuff, go do that. Whatever you need. I've got farming in different locations. I've got it in forests, like literally forests. If I want to fall off the grid, you come and see Birchy, you'll find out and see in the wilderness, right? They'll never find you get out there. We've got farming like that. We've got farming that's on the water. We've got farming that's in the one that I showed you and shared with you at the 5 million square meters of land. That's actually, I bought it on the western side of the Great Dividing Range. The reason why I bought that property is to run a solar farm, and it means that I get an extra hour of sunlight per day because of the equinox of the land, because it's gone over the Sydney Basin sort of thing, and it's over that, and it's in and on the other side of the Great Dividing Range. So there's a reason why I bought that. So it depends. What's your reason for buying a farm, and work out what sort of farmland you need. Is it going to be needing crops? Well, you're not going to want red dirt for crops, but you might want it for cattle. So I'm not your farm guy. Maybe if someone's into farming, we could get them on for an episode and they could talk about that as an alternative sort of investment. But it's not what I invest in as a building a portfolio, a traditional portfolio. What is your opinion on the New Zealand market with government removing interest deductibility on existing homes, incentivizing people to buy, build investments? I don't understand that. There's a couple of words that don't add up there in grammar. But what do I think about what New Zealand's done? It just goes to show that it's a system that's on top of us and it's controlling that market. You want to take control of your position in that system and grow what you can. At any point, the government could change things. I don't understand if it's grandfathered or not. So if a lot of rules that have happened in Australia with negative gearing and stuff like that have been grandfathered to existing properties. Last time they tried to remove negative gearing in the 80s, what we saw happen, which I wasn't around for, but it was the research did, that rents rose dramatically. So, if I had a bucket of water here and it was full to the brim and I put my fist in it, the water will find its own level and rise at that point. Excess would flow over. So when I take my hand out, because it's taken the volume out, it would sink down. You'd have a line and you'd see that there's water missing out of the cup. The water will find its own level. Things find their own level in the economy. When they manipulate things, things shoot up, things go down, things go sideways. That's where the opportunity lays. I don't buy properties to look for tax deductions. There's different ways that you could structure your portfolio. You tell me what the problem is, I'll work with that problem. And there's a very good video. I saw it many years ago. I've seen it over the years. People share it around and stuff like that. And I saw it again recently and I was like, fuck, that's me nowadays. That's me. Like in the start, when I first saw this video, didn't understand it. Now I look at it and I'm like, wow, I really understand it. That's great. There's a video about Kerry Packer in some sort of ICAC style meeting back in the 90s talking about tax avoidance and tax fraud or something like that. And yeah, he's sitting there saying, you set the parameters. I'm just working with what I've been told I can play in. Don't come to me because I'm trying to outsmart you guys. You set the field, I'll work on it. So whenever there's a problem, whenever there's an issue, whenever there's something to work with, we've just seen Corona. I've been the happiest guy ever. I can't say the same for everybody out there, right? I try to make people happy. I try to help people. Everybody's got their own race. But I've been happy because I've seen the opportunity. I work with the opportunity. I've got everything that's out there. I can play on the field. So am I impacted negatively upon these things? Of course I am. Do I dwell on that? No, I'll work with what I can. And I think that as an investor, as being successful in whatever you're doing, you work with what you've got and you make the best out of it. So, that's my thoughts on it. I wouldn't pack up my ball and get the shits because someone made one thing. And it just made me think about a very important video about tenants, and I'll make a separate video on that, which I've been thinking about for a while, and I'll come back to that one and make a video on that because it's similar to people saying about a vacant property or something going wrong, what would you do? And Birchy has an answer to that one. Question 11 here is there a downside to owning blocks of units? Yes, there is pros and cons to owning blocks of units. Yes, you will feel like you don't have to pay strata levies. However, when you realise that when you're paying strata levies, let's say you buy a block of 5 units or you buy 1 unit in 5 units, right? The benefit over buying the block of units is that you have all the units. You don't have to pay strata fees. Great. But what are strata fees? Strata fees cover for the maintenance and upkeep of the property. Strata fees pay for the compliance across the property. Strata fees pay for the insurance across the property. Strata fees pay for the maintenance against the property. So yes, you can buy the whole block of units and save yourself paying a strata fee, but you're going to be paying all that shit yourself, which would equal similar sort of amount. So I see all these people that come to me and they're like, oh Nathan, I'm so smart, I want to buy a block of units. But the problem with buying a block of units is that it becomes a commercial loan. So let's say, for instance, you could buy 5 little units for 200 grand or 1 block of 5 units for $1 million. Yes, the 1 block of units sounds great. You would save a few costs. That's about it, right? You've got it all in one spot. Second, the con to that is that you've got all your properties in one spot, right? So then your risk is all in that. If that one market turns to shit, something goes wrong, well, then you're stuck. If you've got 5 individual units, if you fell into trouble, right, and you had to sell something, if you only had 1 property with 5 units on it, you'd have to sell your whole asset. And you've got no asset. If you had 5 individual, you could sell off 1, you'd have 1, 2, 3, 4 units still in there. That's the benefits of it. As for growth on individual properties, you would see that on the individual units, you probably see a great level of growth in the block of units. The reason being is because you've got a very small segment of the market that could buy the block of units. Instead of the singular unit, you can have a homeowner, first homeowner, family, single person, investor, whoever could buy that property. If you've got a block of 5 units, you have to put down double the amount of capital times 5, right? Because you're paying $1 million, not 200. And then you've got a market that's very small segment, which is investor. There's investors that can afford it. You've cut out most of your market. So there is pros and cons to them both. I have a balance of all of them. You can't go back and pull equity. It's very hard. When you go get a commercial loan, just for people to understand, if you go buy a property like a block of units, get a commercial loan, the valuation fees are probably $4,000 or $5,000 just to get the property valued. To revalue it and pull out equity, good luck with that, right? It doesn't happen. I pulled out commercial loans equity like once or twice in my whole portfolio. That's it. I've tried to, like, I've got shitloads of equity, but for all the smart asses and the haters come out and they say, oh, Nathan's got no equity in his commercial properties. They've got shitloads of it. But the whole process and the loan structure is commercial is different. So just be mindful of that. With those little ones, if you had 5 individual ones, you could pull out the equity and move on. You've got 5 hooks in the ocean. If you've got a block of units, you've got 1 big hook. You're trying to catch a big fucking shark, right? Good luck. You have 5 little hooks, you catch little fish, catch them, pop them in, get another one, bang, pop them in. That's the equity. So you need to work out what is your game plan. Is it to get just cash flow? If you're getting a block of units, it's just cash flow. If you've got individual units, it's cash flow, equity, growth, risk minimization, diversification, all those things come into that point. So just, yeah. Another question, trust or should I own a personal name? This one is, should I buy under ABN, trust or individual? Speak to your accountant. I've already answered that. Not going to answer that one. If we own a property and the bank goes bust, do we lose our property this way? Properties are bundled and sold as bonds on the stock exchange, so we don't own them from this point of view. Good question. I actually talked about the, if we look back in the GFC, the banks went bust and, certain entities went bust. And this time we've got countries going bust, we've got central banks that will probably go bankrupt. I actually think that we'll see central banks go bankrupt after this, because the central banks are owning all the time bomb, and the IMF, via special drawing rights, will have to bail them out. So just remember this. It's actually a good prediction, random as hell, just straight out. We're going to see central banks go into shit, be bailed out by the IMF, and then special drawing rights will be used as our currency. That is a prediction for sometime in the next decade. Could be next year, could be 2 years, could be 3 years. But when that bit crap breaks, that's when the central banks will go broke. But yes, we did have seen banks go bankrupt beforehand, and they didn't end up with all the properties, because the asset of the bank is not the property. The asset of the bank is the contract that you've entered yourself into. So that contract is a loan. Yes, there's a thing called an all monies clause, right? If any time the bank can just come into anybody's house and say, we want you to pay the loan back, you've got 21 days, pay us back. Does it happen all the time? No. But with the banks, they can do an all monies clause to you, but they don't do it generally because you are the asset. You as the person, right? You're right. They package your shit up and they can sell it on the stock exchange, but it's not. It becomes the asset of the bank. It is the value of the bank. They know that there's an income going to be generated from that contract that you signed. So when you sign the contract and the bank goes bankrupt, they don't go, oh, okay, everyone just pay your loans back, because they're not in the business of that. They're in the business of owning your blood, sweat and tears, your nuts, your whatever, for the next 30 years via that mortgage, and they will take your mortgage. I don't know why I'm going like this. It looks like that Whopper ad where they go, oh, a burger. But no, they take your mortgage and they sell those mortgages to another bank. So many banks were illiquid in the GFC, and they went bankrupt basically, and they had to merge and get bought out. I'm not saying or suggesting that any of these banks did. I did hear lots of rumours back in 2008 and 2009, but Bank West, for example, got bought out by CommBank. NAB and UBank merged. Rams and Westpac merged. All these different mergers and acquisitions went on in that period of time. And if the bank went bust, you still got to pay your mortgage. So in short, if the bank goes bankrupt, you got to pay the mortgage. It'll just be to some other bank that buys that book. That's where the asset is. You are the asset, your property is the security, and that's what it is. The bank's in the business of giving money out. They want to lend money. A lot of people go to the bank and try and rob the bank with a gun and say, give me all your money, right? But the bank just wants to give you money. That's their game. So understand their game, understand what you want, understand what your strategy is, and work out a plan of being able to get that from the bank. Some more questions, and we'll try and, how are we going for time? We'll probably go for another 5 minutes or so, answer a few more of your questions. Do you think there'll be opportunities in property in the future with house prices going up? Yes, lots of opportunities still out there in the marketplace. As I said, I'm still picking up properties for sub $100,000 in large areas. Still seeing, opportunities that are out there. Will it change in the future? Yes. Will it be harder in the future? Most likely. Every time assets rise, it's becoming harder and harder for people to, accumulate an asset. I've had people over the years that have said, oh, Birchy, you're going to be in shit when the market crashes and all these things. I've heard them from their undies in their mum's basement of their house, probably like some big fat dude going, oh, writing shit on a keyboard. But anyway, if I would love nothing more than the market to crash. I don't like the market going up. I want it to crash because that means I can buy more shit for my money, right? I understand how it works. It doesn't matter either way. If it goes up, all my assets go up, but I'd still want more assets. It's still never enough, still not enough, still don't have enough assets. But I'd prefer that the market doesn't go up as high as it is, but the more it goes up, the harder it is to purchase. Next question here is fixed interest rates versus variable interest rates, how to fix the interest rates. There is pros and cons of fixing interest rates and keeping interest rates variable. If you fix the interest rates, A, you can't sell it without doing a break fee. B, you can't refinance without paying a break fee. You're just stuck in that loan. So, for example, if you buy a property for 200 grand, fix it. This scenario happened at the start of the year. I had a client at 250 grand or something. I bought him this unit. It's worth about 350. We revalued another one in the complex for like 100 grand more. This guy bought his property. We went back 3 weeks later to unfix it, to pull out the equity, and he couldn't because the bank the bank that he was with wouldn't let him do anything with it because it was fixed. And we went to take another loan. He goes, oh, my broker said it's going to cost me 10 grand to unfix it. So shit finance advice gives shit results, and it can trap your equity in there. So there is benefits of fixing and there's benefits of keeping them variable. For me, I like them variable. You're taking a bet against the bank anyway. The bank's already factored in their piece at the table and their chess moves. With it, you can fix them if you want, but I haven't seen it, too beneficial for all that many people. So it comes up down to you of what your comfort level is, and if you want to fix it for certainty, fix it for certainty. If you want to leave it variable, I think that's where it's at, and that's where it's at for me. Will there reach a limit that property is too hyperinflated that is not worth investing in the property? Yes, I believe it will be like that, and I think that in lots of areas it is uneconomical to purchase properties. Like lots of things I look at now, I'm like, shit, I would not pay that for it if I had to buy it now. Yes, I've got properties in those areas, but I would never want to buy it. I have no interest in selling the property because I would never be able to get back into that market. And that's where sort of leads me on to a next question of, do I ever sell properties? Which is literally the next question. I have sold properties because I've either bought them for the purpose of selling and I've used maybe someone else's money to do it, or I've bought them, and I needed to clear some properties out and get some capital back. Like I've bought properties cash, lots of properties from day one. I was buying stuff with cash, and I've had to get my cash back out. The only way I thought of on that day was to sell off an asset. But the only reason why I'd sell off an asset today is that it really just got under my skin and pissed me off from an admin perspective or whatever. I've got like 3 properties which are in a regional area which I absolutely hate. It's an area back in the day. I bought them for like 20 grand, 30 grand. They used to get fire damaged and shit. I'd buy them, renovate them, and I'd rent them out. My purpose was to buy them and sell them and make money with these cheap fire damaged properties, but ended up keeping them for a decade. They rent out for decent money, but in between tenants and just admin pain in the ass, and the market's gone nuts there. So I'm going to sell off a couple of them and repurpose those loans over new assets. But very, very rarely would I ever think about selling an asset. Like I have no value in money. I only want the asset. I don't care about the money. I want the asset. Remember that. Fuck money, get me assets. That's what we need to look at. Is it best to rip out equity even though you're not planning to use it straight away? Yes. As the disclaimer that I should always put on these videos, I am not anybody's financial advisor. Make your own decisions in life. Don't look at me for financial advice. But think about it this way, right? How often, like let's say for instance, you've got 2 incomes, right? You've got a husband, you've got a wife. The wife goes off, you only got the husband working, right? And when I say off, I don't mean off like with your neighbour, but it could be that too. But, off to have a baby or something like that, then you've only got 1 income. If you only have 1 income, can you borrow anymore? No, you can't. You might be in a position like we're at now, which is very fitting, which is that we've got APRA changing the laws. You might be like, okay, I want to go get a loan today. The bank says, no, you can't get a loan because you don't service anymore. If you have already extracted an equity, then you'd be in a position where you could use that equity. If you have access to the equity, I always suggest to people to go and get the equity, even if it's just sitting there in an offset account, because then you've got availability to use that equity. I see so many people, they've got like $1 million sitting in their equity, and it's like, why don't you go and use it? Oh, because it's too risky, I've got to pay for interest rates, right? And this is not that I want to borrow money off you. I never ask anyone to borrow money off them. I don't ask for shit like that. However, but let's assume you had $1 million in equity, you're paying 3% interest on that. I would be happy to pay 10% interest, right? So if you got $1 million out, lend it to Birchy, I'm just using this hypothetical, and I paid you 10%, you'd be like, fuck, why is Birchy paying me 10%? I'm only paying 3%. That's great. I'll make 70 grand a year, right? The thing with that is that 7% you would make as an income, you could be making 70 grand a year. You'd be lending the money to Birchy, right? That's cool. If that was such an interesting scenario, wouldn't you be questioning, why is Birchy happy to pay me 10%? And what is he doing with that money? Because I'd be like, 10%, I'll just go buy whatever and go and get a 20% return, and I'll make 10% on it. So think about what you could do with your capital if you were to be able to use it more, strategically. So yeah, on that front, if you have available equity, you should always get it, because you never know what's going to happen. Let's assume that we're starting off in 2020. It's January. You've fucking popped the party pooper, and everyone's smashed, and they're watching the fireworks go off. And you're like, what's my goals this year? I want to get some properties. And, you pulled the equity, went to the bank on the 1st of January 2020, pulled out equity, and you pulled out $500,000. Great. What could you do with it? You could do lots of things with $500,000. I've built people fucking super awesome portfolios with 50 grand and 100 grand. Not $500,000. But let's assume you had $500,000 just for the fun of it. You pulled out your $500,000, you could do heaps of things with it. You could build 10 properties, 20 properties in your portfolio. Cool. If you waited until April 2020, and then we saw obvious things that had occurred in 2020, you could be sitting there going, fuck, I wish I had a job, right? You got no job. How do you know? Is your job secure? No. So you could get a loan today, but you lose your job tomorrow, you're fucked. You can't get your equity out. You want to make sure that you've got access to that capital. If you can get it, get it. It's in your power. It's in your position. That is a strength of yours, that you've got access. If things turned to shit in the start of 2020 and you had $500,000 worth of equity there, you'd be like, I'll ride this through. I'll go get myself a caravan and drive around the country and sit at the beach all the time. I don't need a job. I'll get through. I'm fine. I'm fine for the next 5 years. So that's, options and choices that you had. But if you didn't get the equity out, it was stuck in there, then you would be lacking options. And you should always take as many options that you can in life, because that's what's important. With restrictions, what are your thoughts on making the most out of Airbnb for investment properties? I do not do Airbnb. I think they're crap. Lots of people might make money. Lots of people do certain things, all that. It's not my game. I don't believe in it. The reason being is that there's issues with tenancies, with insurances, with vacancies, with the furniture in there. It's too much messing around and not a part of what I would want to do. Yes, I own fucking motels and resorts and all that sort of stuff. And I didn't even want to do that as a business. I didn't even want to own that as a business. But I bought the infrastructure and I was like, okay, I'll run the business, right? And it became a business. And that is painful enough, let alone Airbnbs on residential properties that are non-compliant, and dealing with councils and dealing with regulations and dealing with any of that sort of stuff. I hate councils. I hate governments. I don't want to do anything in those areas because it's just a pain in the ass of red tape as well. And we all know that, your house that you're renting out or that you're buying to run your Airbnb from is not it's a residential property, not a short-term stay property. So there is all that red tape. It's not something to get into. You probably make the same amount of money, if not even more, or maybe a little bit less, by running it as a normal residential property. The other thing to think about, and it's a fun one for everyone, is they go, I'm running my property as an Airbnb. Cool, right? The bank will not take that income as income. They will not. It's like driving around for Uber. It's fairy dust to the bank. They're not going to use that for your servicing. So if you need your property to service for a loan, you've got a property and it's renting out as Airbnb, you go, well, I'm getting the same amount of money. There's three things that will occur. You get your property, you rent it out fixed term, you got your money coming in week after week, cash flow. You rent it out Airbnb, one of three things can happen. One, it can rent out for more money. Two, it can rent out for the same money. Three, it can rent out for less money. Doesn't matter which one it is, the bank ain't going to look at that and go, oh yeah, this guy, he's so great, let's give him some more money. They go, no, we're not including any of that money as income because it's come from Airbnb. So they don't calculate into your cash flow. So it's like that property sitting there vacant. So make up your own decision on that. I make the most out of Airbnb by not doing it. That's my view. Everyone's view is different. And I know I've probably set off a lot of people that are going, fuck Nathan, did you know? That's it. That's just good luck, but it's not what I do. It's not my strategy. Do you still have any land that you rent out to people? Good question. I actually had lots of interest in that, but never actually finished it all. It was a great idea. So about last year, in the middle of the, maybe May last year, I was going to rent out small plots of like 2,000 square meters or a half an acre, 2,000 square meters is a half an acre or half an acre of land, which I said people could go and plant their trees and crops and whatever. People have got like 300 square meter block, no backyard, whatever, a unit, no yard, whatever. They could use some of my land. I have millions of square meters of land that people could use, but I never actually went through with it because there's just too many red flags and red tape around it, but heaps of people are interested. It might be something I'd look at in the future if you guys are keen on that. If I could get 20 people to rent out a piece of land, in your capital city, wherever, I'd look at it again. But it was something. I had 50 people so message in and said, yeah, I want to do that, but I didn't follow it up. But if you do, let's chat. How can you access your super to use it to buy an investment property? How does it work? Do you have to be of a certain age to take it out? No. Do you have access to your super? Yes, you can use your super to buy property. Yes. How does it work? Let's talk about that a little bit. And do you have to be of a certain age to take it out? You can access your super and put in a self-managed super fund at any point in your life, but to actually take it out and to use it yourself, you can't. There's a lot of compliance, red tape, all that sort of stuff. It's important you speak to a financial planner on that front. If you do, want to look at what you can do with your super. I don't trust my money with people that I don't know, especially with the people that be running a super fund. I just do not trust that industry. I've had a self-managed super fund for about 12, 13 years. Most of my investors have self-managed super funds, which means that you can control your own super fund. If you do want to look into that, there's a lot of compliance and stuff. You need to speak to a specialist on that front. Reach out to my team and we can help you on that. I'm just looking here. We've gone on for ages and ages and ages, and this I'm going to wrap it up now. This is being our part 2 of real estate investing, being a slow game to become rich. It's not a get rich overnight and quickly, and it's nothing sexy, nothing flash. But building a portfolio is very fundamental. It's what gives me and thousands of other investors that I know the ability to do what they want, when they want, how they want, and live life on their terms. So if you have got a portfolio, need help with it, if you don't have a portfolio yet and you want to get some help on that, reach out to my team, fill out the details in the link below, and my team will be in touch, work out a bit of a strategy. Ultimately, what have you got to lose? You've got your life as you're living it. You can go back to your job. You can go do whatever you want. Think about it as a matrix. I'm not Morpheus. I don't have a blue pill and a red pill here, but you can take those options, do whatever you want, hang up from this, go back to the matrix, or you can reach out, take the red pill, and see how to exit the motherfucking matrix and get to reality. So on that note, thanks a lot for listening. You can always find us on Google, Apple, Spotify, YouTube, Facebook. Hit us up, subscribe. Make sure you share if you like what we do with your family and friends. Give us good ratings, give us a thumbs up, give us some stars and reviews. It all goes to help me come back and give you some more of my time to share with you and answer the questions in from the community. Keep being awesome, guys. Thanks a lot for watching. Have a great day. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all telling lies, I know what they been telling you. I'm the opposite, the Donald Trump of Australia. It's amazing, here for the taking. My time is never wasted, just getting wasted. These girls say I'm really breathtaking. I can't help it if I really misbehaving.